Good morning and welcome to Managerial Accounting for the spring 2022 semester. As you can see on the calendar, we will be starting chapter 17 today. So you should be finishing up the chapter 16 problem. I've had questions from several people who are working on it and got stuck. So the beginning of class, we're going to talk through that problem. We're not going to do the problem together, but I'll kind of give you an overview. So that should help at least get you started. And if you have more assistance needed, then please contact me after class. You can either schedule with me through Starfish, send me an email. I can reply by email and answer specific questions. Remember, with Cengage, I can get actually into your problem and see exactly where you are. So what I would like to have happen is if you're putting in wrong answers and then asking for help, just leave those wrong answers in there so that I can maybe get a sense of what you're trying to do, and so how I can best be of assistance without actually just giving you the answers, which defeats the purpose. So hopefully, ideally, you're finishing up that chapter 16 problem today, but if you need more assistance, feel free to take more time to work on that and just let me know if you want assistance from me after you have tried the problem on your own. Remember, you can use the check my work, and sometimes the information in those gray boxes that appear will be helpful to kind of guide you in the right direction. And then because we'll be starting chapter 17 today, as always, the chapter 17 pre-quiz should be submitted by the end of the day today as well. And the pre-quiz, you need to score 60% or higher to get full credit for that. Something I needed to point out that if you had me last semester for financial accounting, you are accustomed to the grades transferring over directly from Cengage CNOW into the Blackboard gradebook. And for whatever reason, when I set up the course this semester, that piece of the setup did not work. So I need to move those grades manually. So I'm not doing that on a daily basis. My plan will be to do that at the end of every chapter or a couple chapters. So if you're concerned about whether something was submitted correctly or whether I can see your grade, where you want to look for that is in the Cengage CNOW app, and I will be manually moving those over. If I enter a grade into the Blackboard gradebook and it's not the grade that's showing in CNOW, that shouldn't happen, but if it did, keep in mind I'm doing this manually for dozens of students between all of the classes. So if you do see something that you think is inaccurate, please bring that to my attention. It certainly would not be my intention to include a grade other than what's in that CNOW application. But it could happen that I get off by a line, or I miss that you've completed an assignment that you hadn't submitted for grading. So you need to let me know if that happens. Just send me an email politely, and I will be happy to check on that and fix it as appropriate. Okay, so chapter 17 will be our third chapter, and it's on process costing. So we have a bit of an overview of that, in chapter 16, why companies would use process costing in the first place. But today we will get started with how do we use process costing. In the reference materials folder, there are a couple items in the chapter 17 folder that I want to bring to your attention. And in addition to, as always, the links to the videos, and I will update these. So right now, these are all the videos from last semester. I will update those as we have new videos. This should be the correct problem for chapter 17. So just like I explained for chapter 16, if you get stuck and need assistance, please try it on your own first when we get there. Try that problem on your own and then go to the video. If you have more concerns with that, more questions. And once you've done both of those things, tried it on your own, then watch the video. If you still have questions, I'm happy to help. There is an Excel file linked here, the cost of production report, and that is this right here. So this is just a template that I prepare that helps us to see how things work out, how we do the calculations. So I will be using this template in class as we work through our exercises to just show you how, what the formatting might look like, because it's easier for us to use this rather than to try to be writing it out on the screen. The format is all here for you. That template is here for you to use if you need it for working on the homework problem or working on any exercises on your own. So that's that first link in the Chapter 17 reference materials folder. And the second resource material or reference material is this. It's just a snip from the book, Exhibit 8 from Chapter 17, but this gives you an example of how to use the production report that I have for you right here. So I will refer to this, and you can see that they have things numbered, steps 1, 2, 3, and 4. I will actually use those step numbers as we're working through, as I'm talking about each of these exercises and problems that we're going to do. So that's what's out there for you in Blackboard, and we will be using those during class, and you will want to know where they are to use during class and or outside of class on your own. Any questions about that procedural stuff, administrative stuff, before we get started for today? Okay. So as I said, we're going to start with just an overview of the Chapter 16 mastery problem. And that's what you should be seeing on your screen right now. I can make that a little bigger. If it's easier for you, you are certainly welcome to pull up your own Chapter 16 problem if you are still working on that, which I believe most everybody is still working on this. So as always, we're given some information at the top about, generally what's happening. I know there's a tendency to skip over all of those words and just go right to the numbers, but it is very important that you read everything that's given. We've seen that in earlier settings as well. So it explains about who the laborers are. We have 3 knitters, 1 office manager / knitting supervisor, and it tells us that position is really split between the office manager, which would be a period cost. We talked about the cost classifications at the beginning of the semester. So product versus period cost. Product costs we know include direct materials, direct labor, and overhead. Period costs are the selling, general, and administrative expenses. So this supervisor position is actually a split position. Half of that person's time is office manager, so that's a period cost, and half of the time is as knitting supervisor, and so that's part of the product cost. If we weren't making the product, knitting these sweaters and sweater vests, then we wouldn't need a knitting supervisor. So that part of this employee's time is considered a product cost, but because it's supervision, that's going to be part of the overhead cost. All wages are paid in cash at the end of the month. It explains about the knitting machines. So each knitter has a knitting machine. That means they have 3 knitting machines. And then they also have a packaging machine. It gives us the cost of those. It explains how to calculate the depreciation, estimated useful life of 10 years, no salvage value. That's true for both machines. So you should be able to calculate that straight line depreciation for those machines when you get to that. We're given some additional information here about what are the trial balances at the end of November. And then we're looking at what happened during the month of December. So, and it actually, I forgot, you don't actually have to do that depreciation calculation because it tells you what that amount will be for the year. So you're given all of these annual amounts. These are the overhead accounts. So in chapter 16, we have learned the 3 steps for allocating overhead in the traditional approach. We have our estimated amount. It tells us that they're going to use direct labor hours as their cost driver, and it gives you the estimated direct labor hours here. So you should be able to calculate that predetermined factory overhead rate based on these budgeted estimates and the estimated level of the cost driver. It then goes through additional information about the materials, the direct labor, and gives you information about the specific jobs that were being worked, job 83, job 62. So you're going to be tracking, basically creating the job order cost card here, adding the direct materials, direct labor, allocating the overhead based on the overhead rate you calculated up here, that first thing you had to do. You're going to be journalizing the entries as we did in some of our exercises. So it's telling you to journalize the materials, journalize direct labor, allocate the overhead based on that rate that we calculated at the top. These journal entries are all for the first half of the month. Then job 62 is completed. So you need to move that out of work in process and into finished goods. Then it tells you that job 62 was sold. It tells you how much it was sold for. So we're going to record the revenue, and I'm going to assume it was on credit. I don't see where it says that. Oh yeah, sold on account right there. So we're going to record the revenue for that. And then we have to record that we no longer have that product. So we need to move it out of finished goods into cost of goods sold. Then it has you do basically the same process for the second half of the month, recording our direct labor, allocating overhead. This part is probably the most challenging part. This is where I've had the most questions by email. I don't know how to do this last part. So again, I don't want to give you the answers. I want you to work through this on your own, but it does tell you that you're going to be paying some of these expenses in cash. So payroll, rent, and utilities. So you know that's going to be a credit to cash as we pay those. And then you're going to be recording the let me see what we have here. So we have some factory overhead that we're going to record. Well, you know from what was given up above what's going to be included in that overhead. We've got the 1 month's depreciation. We have the factory utilities that we know is overhead. Remember, we talked about that supervisor being part of the half of that salary is for overhead and half of that salary is for a period expense. The payroll for the direct labor has really already been recorded, as we did this entry here to record direct labor, and then the one that was up here. So we've really already recorded that direct labor expense. And when we recorded it, you would have recorded it as a credit to wages payable. So you'll need to remove that wages payable, whatever that amount was for the totals up above. And then we need to record the wage expense for that administrative person, that office manager, half of that salary. And then record the depreciation on the equipment. So that's what that entry is going to look like. I'm going to leave it to you to calculate those dollar amounts, but the factory overhead, remember, is going to include all of those pieces that it told us up here are part of the factory overhead. All the things that it tells you still need to be recorded will need to be calculated for the month and added together, and that will be the debit for factory overhead. Next, our last journal entry is and so it was just posted in the chat. How would we even know what the correct order of those accounts is, basically was the question. So there is no correct order for the accounts, other than when you write a journal entry, the debited accounts need to be listed first and the credited accounts need to be listed after all the debited accounts. So there's no correct order other than keeping the debits and the credits separate. What I was doing, the software kind of guides us to the order it expects them in, and it needs to do that because, as you know, when you hit the check my work button, it's comparing what you put in to what they have coded as the correct answer. So even though there's not a right and a wrong order for those accounts, we need to get them in the order the software is coded to expect them. So when we look at this drop-down list, it doesn't give us, for each one, it doesn't give us the same account titles. So it really makes it so that you have to put them in the order that the template is expecting them. But for these three, the first three are the debited accounts and the second two are the credited accounts. Within those three debited accounts, there is no right order. We could have put wages payable or wages expense first. So that's a fair point that, how do you even know what order? And that's really my answer is there is no correct order, but there is an order that the template expects to see them or is coded to see them. And with the choices of accounts they give you in those drop-down boxes, they guide you to the order they expect. But if we didn't have those drop-down menus like that, there would not be an incorrect order within the debited accounts, as long as the two credited accounts go after the debited accounts. And again, we could have put these two credited accounts in the opposite order, but it doesn't give us the option of putting cash here. So, and I would just remind you, for those of you who are working on this, you will have later this morning after class, you will have access to this video. And so you can always come back to the video if that's easier or better than making notes or taking screenshots now. However you want to do that is fine, but the video will be posted later this morning as soon as it's processed. The last journal entry we have to do here requires, in my mind, is best to do if you draw out the T accounts. Then I would actually do that for all of these accounts that are listed here, not just the overhead account, but I would keep track of a T account for each one of these separate accounts that you see in the final question: materials, work in process, finished goods, those three balance sheet accounts, inventory accounts that we've been learning. The factory overhead, which is a cost account. So it doesn't actually appear on your financial statements. It's that cost pool that we've been using to accumulate those costs, debiting the actual cost, crediting the allocations to work in process. And then your job for this very last entry is to figure out what's the balance in that overhead account. We know it has to be 0 at the end of the period. So I can actually tell you that right now. The factory overhead account, after you make this final entry, must be 0. It must be 0. You don't have any other choice. That's the point of the adjusting entry to, as this explains, dispose of the balance. So you need to calculate what that balance is by going back through all of these journal entries that you've created, tracking those entries through the T account for factory overhead, and then find the balance. Then make that adjusting entry. Remember, we talked last class about how do we do that adjustment? Well, we first have to know if it's a material amount, and it will not be for this exercise. So as long as it's not material, as long as it's less than 5% of the total, we're going to make that adjustment in factory overhead to zero it out. So let's say it has a $200 credit balance. I'm just throwing a number out there. We would need to debit factory overhead 200. And as long as it's not material, we make that the other side of that entry, in this case, in my example, the credit side would be the cost of goods sold. Okay. It is entirely possible, though, that our factory overhead account, remember, it can be either under or over applied. It could have a debit balance. And so if it had a debit balance of, let's say, $100, we would need to set up the entry like this to zero it out. The whole point of this final adjusting entry is to clear out that balance, dispose of it, to make sure it's zero, to make sure we have completely allocated that overhead, but not over allocated it. And so when you look at these drop-down lists, both the debit and the credit side allow you to choose cost of goods sold and factory overhead. And you'll have to determine which one is the debit, put that one first, and which one is the credit, put that one second. And then at the end, your factory overhead will have a balance of zero. As you've tracked all the rest of those T accounts, you'll be able to calculate the ending balance for each one of these other 4 accounts. So that is my somewhat, but not very brief explanation of how to go through the Chapter 16 problem. Before we move on, is there anything, not a specific question about how do I calculate this number for this problem, but is there anything general that you want to ask about this problem before we move on? Okay, so as I said, please go through this, try it on your own. If you get stuck or get stuck again after thinking about and applying what I've just explained here, maybe rewatching this part of the video if you need to, let me know if you need more help. I'm happy to help. Use the check my work button if you need to do that as well. Okay. And I'm going to go now, just to be prepared, I'm going to pull up the Chapter 17 exercises. There they are, because we'll get to those shortly. Does anyone, before we start the new chapter though, is there anything anyone wants to ask about Chapter 16 that maybe wasn't from the problem? Anybody with questions? All right. Let's start our new chapter then. Give me just one moment. I just need to check something here. Okay. There's one more person that I did not have on the attendance. Let me make a note, so I'll fix that after class. Okay. And we're going to get started with our coverage of the Chapter 17 on process cost systems. So we have 4 learning objectives for this chapter. You can see those on your screen. I would remind you that you do have access to these PowerPoints as well if you haven't ever looked for them. The way you would find them is by going into the Cengage content area in Blackboard. There is a link in that content area to the textbook companion website. And on that website, you will find the student PowerPoints as well as some other resources that you may or may not find helpful. But in particular, I'm mentioning that for people who did not have me for financial accounting. So this whole thing is new for you. You do have access to a student version of these PowerPoints, which includes basically everything that I might show you during class. So we'll talk very briefly about process cost systems, but we really have already explained in chapter 16 why a company might use a process cost system in the first place. We'll be preparing the cost of production report, and I already showed you in the reference materials folder that I've created an Excel version of that I find very helpful to kind of organize our thoughts, organize the numbers, rather than trying to kind of put together a format on our own. The format's already there for you. So feel free to use that template whenever you find it helpful. And I will be using that during class as well, as we put together the information from the exercises. You do not need to submit any of those. So if you're using that cost template, if you are using it for any purpose, whether it's exercises problem on the exam, you may find it useful as well. There's no need to submit any of those completed. That's really just, as I refer to the T accounts, kind of your scratch paper to work through the information for this chapter. Once we have that cost report, we'll be able to journalize the transactions, very similar to what you just did in the chapter 16 problem, or you will be doing, that we just went over. And then we'll be talking about how do we compare what we have this period and what we have from a prior period to know if costs are increasing, decreasing, fluctuating around, and so on. And there's Objective 5, we'll also be looking at the very end of the chapter. How do we use this to evaluate how we're doing as a company? Now, there is an appendix to this chapter, but as always, you are not responsible for the appendix. It is not, we're not covering it during class. It's not in the exercises. It's not in the problem. There may be a question that you see on the pre-quiz. And so if you do, I don't know whether you will or not, but if you do see a question on the pre-quiz, please know you will not be responsible for that in the long run. You may just have to answer the question in the pre-quiz, but don't get too wrapped up in that, because we will not be doing that during class. We have enough to cover without covering the appendices. But what we will be using, you'll notice there's reference here to the weighted average method. What we will be using in class is the FIFO method, first in, first out. That may sound familiar to you from chapter 6 in financial accounting when we did the inventories for a merchandising company. So we'll review what it means to use the FIFO method. But as you can tell, because there's an appendix, many companies, instead of using FIFO, will use weighted average. And so I just want you to be aware that that's out there. It does exist. There's just a minor tweak, and I'll probably mention that as we learn about the FIFO method. I'll mention how weighted average is different, just so that you know that, but you won't be responsible for doing that on your own at any point, exercises, problem, or on the exam. It will not be on there. Okay. So let's talk briefly about why a company would use a process costing system. Remember, we said companies would use a job order costing system. In order to use that, they must be able to clearly identify a beginning and end to the production process. So that's the must. In addition to that, it has to make sense for them to want to know costs of a specific product or batch of products. So companies would use process costing instead if either they do not have a clearly defined beginning and end to the process, and you can see here on this slide, it refers to a continuous production process. So if it's a continuous production process, there is no beginning or end to the process. Companies also could choose to use process costing, even if there is a beginning and end to producing a specific product or batch of products. They might choose to use process costing anyway, because they don't need to know how much did that box of nails cost, or how much did that box of screws cost to produce. So when you're producing many of the identical items coming off maybe a production line, even if you can clearly identify, oh, we're done with that knife, or oh, we're done with that television set. Do we really need to know that the television set that was finished at 9:34 a.m. had a different, maybe slightly different cost than the one that was produced and finished at 10:25 a.m. or the next day? If that's not true, if they're producing identical products, they don't really need to know how much each individual one cost. And so they might choose to use the process costing system as a simplification of the job order costing system. So I had pointed out to you in chapter 15, as we introduced manufacturing and managerial accounting, that all manufacturers have 3 different types of inventory accounts. So we're very familiar with those at this point. We have materials, we have work in process, and we have finished goods. So we know that all manufacturers are going to have those. In chapter 16 for job order costing, we said a company that's using job order costing is going to have exactly 3, 1 of each type: materials, work in process, and inventory. And if that company using a job order costing system has more than 1 job in process at any given time, they simply have a subsidiary ledger cost card for each one of those jobs that's in process. And the work in process inventory account that you would find on their general ledger, on their balance sheet, is what I refer to as the master or the control account. And it's really the summary of all of those individual jobs that are in process at any given time. What makes a process cost using manufacturer different is they almost certainly have more than just 3 inventory accounts. They would still have just 1 materials, 1 finished goods, but instead of having just 1 work in process account, they would have multiple work in process accounts. They would have 1 for each identified step in their process. So they would look at their production process and identify work cells or departments or steps in the production process. And each one of those steps would have its own unique work in process inventory account. And so when they're doing their calculations, when they're doing their reporting, like that production cost template that I already showed you, they would have a separate report, a separate calculation process for each one of the steps. So looking at the visual that you have in front of you right now, this production process, it appears, goes through 4 separate steps: department A, B, C, and D. Each one of those departments or work cells or steps in their production process is going to calculate its own costs, and those costs all contribute to the cost of the product, or may all contribute. So I'm not going to try to do it on the Zoom screen because it's a little bit beyond. Well, maybe I can give you just a quick example here. Let me try to do this. So I'm going to draw some boxes on the screen and just kind of describe this process. So the example that I usually use, and I find this much easier to do live in person on the whiteboard, but I'm going to do the best I can here. So for this company, we're going to have a materials inventory. The company we're going to look at is going to be a company that makes cookies. Okay. And so we know that for our company, they're going to have 3 different finished goods. Okay. So we know that this company is going to have 3 different types of accounts. But as I suggested, if they're using process costing, they would have more than 1 work in process. And so we're going to identify for our cookie baking company what steps we might have in the process. So I assume that most of you have made cookies or seen cookies made. You at least have a concept of how that might work. So the first step in the process is going to be what? To mix up the dough, right? And so this company would have a work in process account that's for the mixing department. And we would accumulate the costs associated with mixing the product. Then what happens? Well, after you mix up the dough, you have to form the dough and then bake the dough. And I'm going to, well, no, I'm just going to make it the forming department. And then we'll have our baking department. And I could even maybe identify another step in this process, which would be the packaging department, but I didn't give myself enough boxes here on the screen to do that. So we could have a baking department and then a packaging department. And once they're packaged, they move to finished goods. So we can see this process. We take the materials. So what materials are we using? Well, flour and sugar and eggs and butter and, I don't know, vanilla and chocolate chips and baking soda, and maybe they have nuts in them, or maybe some of them have nuts in them. So we'd have to track that separately. We mix up the dough. We transfer the dough from the mixing room into the room where they're made into cookie shapes, forming department. And then once the cookies are formed, we transfer them into the baking department. So we're physically taking the cookies that are now cookie shapes, taking them into the room where the ovens are, and we bake them. And then if I had that extra step in here, we'd package them up, and then they're ready for finished goods. So that's kind of the flow of costs through the inventory accounts for our cookie company. And we know that if they, once they get sold, we would move them out of finished goods and they would become part of cost of goods sold on the income statement. Everyone follow that process. Right? You know what you understand what's happening here, right? Okay, so have you ever bought in the grocery store, they sell cookie dough that's not, yeah. So Drew, we're going to talk about that in just a second. So have you ever bought cookie dough that's not baked? It exists, right? Even if you haven't purchased it, you know that happens. They sell it in those tubes, and they're, it's just like a plastic tube and they're crimped on the
Yes,
end.
I eat it all the time.
Okay, so you know what I'm talking about. So what if, and I think usually that's like Pillsbury or something, right? So for that product, now Pillsbury also probably bakes cookies and sells them already baked, right? But if they were making cookies that they were selling in those plastic tubes, they would not have to go through the baking department, right? So it would really go from the forming department right into finished goods. It would skip the baking department altogether, right? Now, Pillsbury also sells cookies that have been, actually for that, we'd go right, sorry, I skipped a step. For that, what I just described, it would really go from the mixing department straight into the packaging department. It wouldn't get formed into cookies. It wouldn't get baked. We'd have to skip those steps. Pillsbury also sells cookies, and they're usually like holiday themed cookies. They're sugar cookies, and they're, they might have like a flag in the middle of them around July 4th. They have a Christmas tree maybe in December, I don't know, a turkey or something in November, a green shamrock around St. Patrick's Day. They probably have red hearts in the middle for Valentine's Day. you've probably seen these. It's not a very cost-effective way to buy cookies, but you know, they're kind of cute and they're simple. If you were just going to eat the dough, you probably wouldn't bother paying the extra to get the pre-formed cookies, but there definitely are cookies that go through the mixing department, the forming department, and then go straight to packaging and finished goods. So I'm going through all of this example just by way of making you see why it could be useful for us to know separately, how much does it cost to mix up the dough? How much does it cost to make it into cookie shapes? How much does it cost to bake the product? How much does it cost to package it? And so having separate cost reports for each one of those departments is actually going to be very useful for us. In our manufacturing process, then, rather than accounting for what happens with a specific product, so we're not tracing cost to a specific product or batch of products like we need to do in job order costing. Instead, and I know I mentioned this last week, instead, if you're using process costing, you're really accounting for a period of time. And so if you look, I'm going to erase my drawings here. I'm going to go get this to work for me. Come on, there we go. I'm going to go back to this template that I showed you. So you'll notice the heading of this template says it's a cost of production report, and it doesn't say for job 27 or job 63. Instead, it says for the period ended, for the month or the quarter, the year, the day, the week, whatever, ended on some specific date. So you can really tell that we're using process costing because we're not accounting for a specific job. We're accounting for what happened during some period of time. It's going to be really important when we have a continuous process because we can't account for a specific job. It just keeps running. And the example that I normally use for that is based on my own personal work experience, and that is the oil refinery that's located in Bradford, Pennsylvania. So for those of you who are in the Olean area, you're probably familiar, probably at least know there is a refinery in Bradford. And I used to work there in a previous life, it feels like, many years ago when it was owned by Whitco Corporation, and it was Kendall Motor Oil's refinery. So when I worked there, I was the cost accountant for their refining process. And so at least at the time, it's now owned by a different company. It's no longer Kendall Motor Oil being produced there, but the refinery is of course still in operation, and their process is still very similar to what I'm accustomed to from when I worked there. I haven't worked there in more than 25 years. So when we use process costing, we're reporting for a specific period of time rather than a specific job or a specific batch of products. Do you see the difference? Okay, so I think we've already talked about in chapter 16 examples of companies that might use job order versus process costing. You may see on that list the company that you've chosen for your project. For your project, it's not going to matter to you whether your company uses process or job order costing. Under both of them, we're going to be recording our costs, eventually calculating unit costs for our product, being able to report out how much did we spend to make that product, and then compare it to how much revenue we received, to do that kind of analysis, to prepare our financial statements. So not anything different there, but what is different again is just that we're reporting not on a specific job and, oh, look, we finished that job, let's accumulate the costs, but instead we're waiting for a time period to end, whether it's day, week, month, quarter, year. our reports are going to reflect just what happened in each department in each one of those time periods. Okay. So let's keep going here. I'm just going to move ahead. They use as an example an ice cream company. Probably not as readily applicable to what I was talking about with sometimes we might skip a step in the production process for some of the products that we sell. We're going to be doing this on our own when we get to the exercises, but this you'll also find in your book. It's also in the student version of the PowerPoint. You can think about the cost flow. I really just showed you that with the inventory accounts that I had briefly drawn on the previous slide. But the flow is really still going to be the same: materials through work in process into finished goods, and then onto the income statement as cost of goods sold. We still have indirect materials. We still handle factory overhead in the same way that we have that factory overhead account that gets allocated. It is to Drew's question, and I should have addressed this while I still had my drawings up on the screen. Materials could still be allocated in each step of the process. So if you can think back to the bakery example that I had on the screen and have removed. Let's think about those steps. So the first step I said was the mixing department. And in the mixing department, absolutely, we're adding direct materials. We're also incurring some direct labor costs because we have people there, assisting with that process. They're probably not mixing it up by hand. They're probably using equipment. It might be even automated, but I suspect we still have people involved at some level, even if it's just to watch the machines and make sure everything, moves from step to step as it should. The next step so we've got direct materials, direct labor. We're also allocating overhead, and you can see that here with this flow chart. We're allocating overhead to the mixing department. The next step in my process, I said, was the forming department. So in the forming department, are we adding more direct materials? Probably not. The dough's already ready, right? The dough was prepared in the mixing department. So we're not adding more direct materials likely in the forming department. We may have some supplies. We might have, I don't know, parchment paper or something that we're putting out on the trays to protect the cookies, to keep them from sticking to the pans or whatever. So we may have some supplies that we're using, but we probably aren't adding any more direct materials. We definitely would be adding direct labor and allocating overhead at those steps. As we move from the forming department into the baking department, again, we may not be adding any more direct materials as we're baking. Might be using some supplies, maybe, but not direct materials. Still adding direct labor and overhead. Then we go into the packaging department. In the packaging department, we're adding more direct materials, that is the packaging for the cookies. We have some direct labor, some overhead. So, and then they move to finished goods. So back to Drew's question in the chat a few minutes ago now. Every product that we produce, regardless of whether we use job order costing, process costing, regardless of how many work cells or departments or steps in the process we identify, regardless of how many work in process accounts we have, the end result is a finished good that includes all three of those product costs that we've been discussing since chapter 15, direct labor, direct materials, and overhead. In the process cost approach, though, we may not be adding all three of those product costs at every step in the process. And I think that should be clear at this point with the way I've just described that. So definitely all three costs are included in the product, just like under job order costing, but maybe not adding costs at every step in the process. It could be that every step in the process adds those costs, but it's not necessarily, it's not a requirement that that happens. We're definitely adding cost at each step in the process. Otherwise, we wouldn't need to identify a separate step. So Drew, does that answer your question? Okay. So I think we've talked about this enough. Let's go to our exercises. I've already showed you what the template looks like for the cost of production report. You may want to open that and use that during class, as I suggested, and that's fine. You may want to just look at what I am doing on mine. I would expect, especially when you get to the homework problem that you're doing on your own, that you will want to use that template. And the video that I have for the homework problem, I use the template. So I'm showing you how to use the template for that problem. But that's enough of discussion related to the chapter. Let's go to our exercises and actually make some progress with that with the time that we have remaining for class today. So I'll give you a second in case you did not have them open or in case you're flipping from the chapter 16 problem over to the exercises. And we'll take a look at our first exercise here for chapter 17, excuse me. Entries for flow of factory costs for process cost system. Bradford Incorporated manufactures a sugar product by a continuous process involving 3 production departments: refining, sifting, and packing. So they've broken down the whole production process into these 3 steps that make sense for them. And for this company, they would have 3 separate work in process accounts: refining, sifting, and packing. Assume that records indicate that direct materials, direct labor, and applied factory overhead for the first department were, and it gives us those amounts, work in process in the refining department at the beginning of the period totaled, and then the end of the period totaled. So they've defined for us the 3 steps: refining, sifting, and packing. And they've given us information about what happens in the refining account. So I want to explain something for now. For our classroom purposes for this course, as is usually the case, we do some simplifying with the understanding that this is the principles of managerial accounting. So the idea is, if you understand the whys and the how we do it at a basic level, you could expand upon that to understand how it works at a more complex level. But we are, for this class, always starting at the basic level. And so we're going to make a couple of assumptions to simplify this. And I'm going to write these on the screen because they're important. If I can get my annotate to pop up here. I'm going to write these on the screen for a moment because these are important concepts to recognize, that just because we are doing them in this class for every exercise and the problem and what's on the exam, these simplifications or these assumptions will apply. I just want you to recognize that they aren't always true in the real world. In fact, they might not be true at all in a real world scenario. So, a couple of assumptions. Think back to the cookie factory example that I gave you. And I said, I expect that all of you at least, have either made cookies or are familiar with how to make cookies. You've seen them made maybe. And if you look at the directions, I'm just going to think about Toll House chocolate chip cookies. And the directions for Toll House cookies, if you're not aware, are generally always printed on the back of the Nestle Toll House chocolate chip cookie or chocolate chip bag, just the chips themselves. So the recipe's on there. If you read through the instructions for how to make those cookies, some of you probably know what I'm talking about. The instructions will usually say things like, put the butter in the bowl and cream the butter. And then add the sugar and cream that together until it's light and fluffy. And it might say something like lemon colored or something like that. And then you add the eggs one at a time, incorporating well after each addition. And then you might, in a separate bowl, sift together the flour and the salt and the baking soda, and then add that a little bit at a time. And then you add the chips at the end. Right? Y'all know what I'm talking about, right? That's usually how baking instructions are written, very similar to that. But usually in every class, there's at least one person who says, yeah, I don't do it that way. And the other way of doing it, which apparently works, because every semester I have people tell me, yeah, that's not how I do it. I don't put everything in separately. Instead, what I do is I just throw all the ingredients, whatever it says goes in there, I throw them all in the bowl and then I just mix it up. Is there anyone in this class right now who wants to confess that that's how you make cookies? You throw all the ingredients in the bowl and just...
That's how I do it, I'm gonna admit.
Oh, thank you, Alexis. So Alexis is now going to get the naming privileges, and this is going to be known as Alexis's rule. Thank you, Alexis. So I will refer to this as Alexis's rule. Alexis said she makes cookies by throwing everything in the bowl and just mixing it up. And that is going to be the assumption that we make for this class. I'm going to call them ingredients, but I'm putting that in quotation marks because we're manufacturing a product. It may not necessarily be a food product, even though I use food products as an example quite regularly, because I think people can generally relate to that. So all ingredients are added at the beginning of the production process. So that's going to be Alexis's rule. Throw everything in the bowl and then start mixing. Now, I just described to you the actual typical directions for making cookies, and that's not how the directions indicate you should do it. And in the real world, when you are manufacturing any product, it's probably rarely the case that you throw all the direct materials in and then start doing the work on them. But that will be the assumption we make for this class. Okay. Number 2. Here's that term that we introduced back in chapter 15, and I said at the time, I don't know why they even throw this out there at you in chapter 15, because we don't use it until we get to chapter 17, and now's the time. And that term is conversion costs. So in chapter 15, we discussed prime costs versus conversion costs, and now we're going to use that concept of conversion costs. If you recall from chapter 15, what's included in conversion costs are direct labor and factory overhead. And our second assumption will be that conversion costs are incurred uniformly at the same rate throughout the process, throughout the production process. So we're going to be using those assumptions. All direct materials are added at the beginning of the process, and then conversion costs are incurred throughout the process. Final assumption that we will make is what we are analyzing, the process that we are analyzing or accounting for is either the first or the only step in the process. So those are the three assumptions that we need to keep in mind. These will apply to every single exercise and problem that we do, including what's on the exam. So all direct materials are added at the beginning of the process. Conversion costs, the other two product costs, direct labor and overhead, are incurred uniformly throughout the process. And the process that we're looking at, so in this case, the production department, will either be the first or the only step in the process. So for this exercise, the first exercise we're going to be doing for this chapter, I already pointed out, it really only gives us information about the refining department. It tells us there are 3 steps in the process: refining, sifting, and packing, but we're not going to be doing any of the accounting for the sifting or the packing department. We're going to be looking at only the refining department. And we can talk about what happens after the refining department, but we're not actually going to be doing any accounting for those departments. And there's a reason for that. Again, as I already explained, we try to keep things simple because we have enough to get just the simple part. And we can mention how in the real world these might get more complicated. But the reason that we don't look at in this exercise, the sifting and the packing department, if I look at this, oops, to close that. If I go back to this cost of production template that I shared with you, if there were costs if there was a second or third or a 10th step in our process and we were trying to account for that, you see right here where we've got this and it's in cell A14, if you can't see where I'm highlighting on the screen, where it says units transferred out, and down here in A37, it says total costs transferred out. So if they're transferred out of this step, work cell department process, if they're transferred out from here, that means they're being transferred in someplace else. In this template, I don't account for costs being transferred in. It would just add another, it would actually add another whole column in what we were doing, and it would add a complicating layer to our calculations. So again, we're going to be following these assumptions that are on the screen right now in blue, but we recognize that these are not realistic, that many companies will not do things exactly like we have indicated here, that not everyone makes cookies like Alexis and throws all the ingredients in the bowl at the beginning, that most companies don't have just one step in their process. All right, everybody okay with those assumptions? Any questions about those before we work on this exercise? Okay, so I am going to clear my drawings there so we can now focus on this exercise. Radford Incorporated manufactures a sugar product by a continuous process. I'm not going to read the whole thing again, but we know that we're looking at the refining department for these entries. We're asked to journalize the entries to record the flow of costs into the refining department during the period. And so we've already looked at, you saw my diagram of the cookie department. We saw the flow chart that was in the PowerPoint back here. So we've already talked about what those flows look like. And now in this exercise, we're going to be actually following those costs or seeing how do these costs actually move through our accounting records. We know we have all 3 costs, and we're going to record each of those for this period. So we'll start with direct labor. That's part number 1. So, direct materials. I meant to say direct materials is number 1. So this part, what we're doing right here, isn't really any different than what we did in chapter 16 for job order costing. We are moving those costs, direct materials, direct labor, and the allocation of factory overhead into the work in process account. But in this case, excuse me, remember, this company would have 3 separate work in process accounts. And so we need to make sure we're moving them into the work in process for the correct department, which is in this case, refining. It's the first step in their 3-step process. So where do the materials come from? They come from the materials inventory account. Where does direct labor come from? It comes from the payroll department as wages payable. Excuse me. And where does the factory overhead come from? It's being allocated from the factory overhead account. And again, as we saw in the PowerPoint, there are actually 2 separate factory overhead accounts for in that flow chart. We had 2 separate, that's big enough for you to see. We had one main factory overhead account, and some of that might be divided up between, there might be some costs that are incurred directly in the factory overhead account for each department. But you can see for this company that had 2 separate steps, mixing and packaging, they have 2 separate overhead accounts as well. And so in our exercise, we need to make sure that we're allocating overhead out of the correct overhead account. And what that means then, for this company, they'll have 3 separate factory overhead accounts, and we'll have to zero those out or adjust each one of those 3 at the end of the process if they're using all 3 accounts. So at the end of the month, we need to make sure that those overhead accounts have all been zeroed out if we're using more than one. It could be that we have just one overhead account and we allocate out of that one overhead account. Yeah, it's definitely a judgment call. The question in the chat, I'm not sure if you can, I know you guys on Zoom can see it. I'm not sure that can be seen on the video. It may not be. So there was a question in the chat about, is there a rule for setting up those different overhead accounts, or is it judgment? And it really is a judgment of the business. If you were allocating, so you'd have to be using the same allocation base if you chose to use just one general overhead account. So we've talked about some various cost drivers: direct labor hours, machine hours, direct labor dollars are the 3 that come to mind that we've discussed. If you were going to use one overhead account, you would have to have just one overhead cost driver. So if you wanted to use direct materials for the refining department, but direct labor hours in the sifting department, because they don't add direct materials maybe, then you would need to have a separate account for each one of those, because you'd have to have a separate allocation rate for each one if you chose to use. So if you could use one cost driver, maybe it's direct labor dollars for this company. If you use just one cost driver, you could go with just one overhead account. As we said in an earlier class, we don't want to be unnecessarily complicated. So if we have reason to believe that having just one overhead account and one overhead cost driver still gives us a good estimate of what our actual costs of making these products are, then we would go with just one, because it's clearly simpler, more efficient to have just one overhead account. But if we have reason to believe that having separate overhead accounts for the different departments or steps in the process, that would give us a better sense of our costs, that we have more accurate, more precise and accurate costs for our products, we would probably want to take that extra complicating step of having multiple overhead accounts. And the only reason I know that for this company is because I'm looking at what's offered here, and it specifically said this is the overhead for the refining department, so I can tell that's how they do it. It's the only reason I know. So to finish up this step, we just need to put in the dollar amounts. Those dollar amounts were already given to us, so we just need to put those dollar amounts in. Debiting work in process for each one of those product component costs, and crediting materials, wages payable, and factory overhead respectively. Let me just make sure so those are all the costs for factory, for the refining department. Any questions about part A? Any other questions?
I have one question. So when it says like the refining where the three different costs, how do you
These-
know is like those ones? How do you know is the difference between materials, wages payable, and the factory overhead?
Because it says this word respectively, which means that they're in the same order that they're listed here. So that's the only way I knew that, because
Okay.
it says direct materials, direct labor, applied overhead, and then the cost respectively means that they go in order. Yep, good
Okay.
question.
And then just one more question. So for the first journal entry, the materials are being decreased because it's a credit, right?
Yep.
And
Mhm.
then, so for the work in process refining department, what's the normal balance for that?
Yep, so that is also an asset account. So it would have a normal debit balance. So we're decreasing materials and increasing work in process.
Okay.
So both of those are inventory, different types of inventory accounts. So they're both assets for us, current assets. Anything else from part A? Okay. So it gives us beginning and ending balances. So I will remind you that in Blackboard, you have if I were to go back to I can do this, go back to the chapter 16. Nope, sorry, it's going to be chapter 15, not 16. And in the chapter 15 folder, I have those formulas for you. Right here, basic calculations for manufacturing firm. So this is what we're going to be doing next. We're looking at the work in process inventory account. We're looking specifically at the work in process for the refining department, but the calculation is going to be the same. So it's exactly what's given here. Beginning work in process plus the 3 costs that are added minus the ending will give us our cost of goods manufactured. So that's what we're being asked to do in part B, record the entry journalize the entry to record the transfer production cost to the second department. So the terminology that I used in these calculations, where'd it go? There it is. Cost of goods manufactured, specifically in this case refers to manufactured in the refining department. So this is a calculation of what did we finish, what did we complete in the refining department during the period. So if you look at that formula in Blackboard, we start with the beginning balance, which we are told here is $328,000. What did we add to that? Well, we can see right here in part A, the 3 costs that were added. Now you may find it more beneficial to draw this out in a T account, and certainly you're welcome to do that. Or to use just the formula that's here, if that is more understandable for you. So we start with a beginning balance of $328,000. thousand. We add to that the three costs that were incurred during this month. Materials, direct labor of 660,000, and then the overhead that was allocated. And so now I have the total costs that were in that refining department at some point during the period. And what I found was $3,213,000. We're told that at the end of the period, there was still 295,000 left. So that represents work that was in process, but was not completed. It's still in the work in process department. So if I subtract that, I will get how much was transferred out. And what I found, if I did the math right, with my spanking new calculator, 2,918,000 is the amount that was moved out of work in process refining. And where was it moved into? It was moved into the next step in the process, the sifting department. And so these would represent those transferred out costs, transferred out from the refining department and transferred into the sifting department. In the sifting department, we would add some combination of direct materials, direct labor, and overhead. Maybe they don't add any more direct materials in the sifting department, certainly possible, as we just described with our cookie company. So in the sifting department, it may be that they added just direct labor and overhead, but this number, the 2,918,000, already has in it direct materials plus direct labor and overhead. So it's okay in the sifting department if we don't add any more direct materials. Those costs are still in there because they were transferred in from the refining department. So as I already explained, it just adds an extra layer that we need to consider as we're looking at the costs in the sifting department. And so for our purposes, we're not going to be looking at the costs in any second or third or subsequent step in the process. Everything we look at, yep, I will go over that again, Seth. Everything we look at will either be the first step in the process, like here, the refining department, or it would be the only step in the process. And there's a question in the chat about where I got that number. So I'm just going to type the calculation on the screen here. So we start with our beginning balance, which was given in the opening paragraph. The beginning balance was $328,000 for the refining department work in process. What did we add to that? Well, we added our direct materials, our overhead, and I apologize that my commas aren't really going to line up very well. We added the direct materials, direct labor, and overhead. I'm going to try to get them to line up a little better. Okay. So we have our beginning balance plus the three costs that were added. If we add all of those together, we get the total amount that was in that account during the period, which I think, let's see if that was the number I had. No, 3213. Sorry, 3213 are the total costs that were in the work in process for the refining department during the month. And we know we didn't finish all of those. The exercise again up in that first introductory paragraph tells us there was $295,000 left in that account at the end of the period. And so if I now put in the lines in the proper places, why aren't you drawing for me? There we go. Okay. So does that make sense? Beginning balance plus all of the additions. We can see those in these journal entries in part A, all of the additions, the debits to that work in process account to get the total that was in there in process during the period, the total amount we were working on. And then if we subtract what we're still working on at the end, the 295 that was given, that's how we know how much must have been transferred out. Seth, does that help?
Yeah, it does. Thank you.
Okay, yep, you're welcome. Any other questions on this exercise? Again, you can, as always, you can go ahead and click the check my work button to get your green check marks in there. And there it goes. So I also wanted to point out, because I had someone ask about this in my other class yesterday. It may not be enough just to see the green check marks, because the way the software works, if you leave a spot blank that should have something in there, sometimes it doesn't flag that with a red X. And so when you use the check my work button, I would also recommend that you scroll down to the bottom left-hand corner and just make sure that you got full credit for that exercise or for the problem. So you should get 10% for each of the exercises. So I would encourage you to just make sure you check that.
How will that work for the exams though? If there's no check my work and we just want to know if we should fill in that blank.
Yeah, so you would just on the exam, you would have to know if you need something in there. So most of the time, actually all of the time that it's relevant, it gives us this information. If an amount box does not require an entry, leave it blank. So specifically what happened with this student yesterday is there was a box that should have had a 0 in it. And he looked at it thinking, well, it doesn't require an amount because 0 is not an amount. And so he didn't put the 0 in there, and he lost credit on that exercise. So, for a journal entry, we know that you can't have a debit and a credit. So most of the time, if there's a box, you're supposed to be putting something in there. But what it's telling you, what it really means here is, if you're doing this journal entry, if you have a debit to the work in process sifting department, you can't also have a credit. There should not be some number in here. That can't be right. You can't debit and credit the same account on the same line or even in the same transaction. That doesn't make sense. So where you'd be leaving those, leaving that blank is mostly just if you're doing a journal entry like this, that if you have a debit, there shouldn't be anything in the credit box. If you have a credit, there shouldn't be anything in the debit box. Other than that, most of the time, if there's a box, something needs to go in there. And if it's 0, you need to enter a 0. And that's what happened with this student yesterday. Okay, are we ready to move on? Any more questions? Okay. So let's look at exercise number 2, factory overhead rate and entry for applying factory overhead. And this is something we have really already done in the previous chapter. So this isn't new information, but the reason we have this exercise, the reason I chose this exercise for this chapter is just to remind you that the factory overhead allocation still happens for a company that uses process costing, and it would happen in every one of the departments. So we've really already talked about that as well. So let's go through this exercise. It will help reinforce some of what we learned in chapter 16. The cost accountant for River Rock Beverage Company estimated that total factory overhead cost for the blending department for the coming fiscal year, beginning February 1st, would be $3,150,000, and total direct labor costs would be $1,800,000. During February, the actual direct labor cost totaled $160,000, and factory overhead cost incurred totaled $283,900. So, thinking back to what we discussed in the previous exercise, this company chooses to have a factory overhead account specifically for the blending department. So the dollar amounts that are given here are just for the blending department, and that's what we're accounting for here. Letter A asks us, what is the predetermined factory overhead rate based on direct labor cost? So if you think back, if I were to go to Blackboard, I could just show you where this, remind you where this is. In the chapter 16 reference materials folder, we have a page. Oh, I moved it up to the top. Traditional approach to overhead allocation. And what we are doing in this exercise is walking through each one of these 3 steps. So we're doing step 1 first. That's letter A, calculating in the budget period or the planning phase, as we're leading up to production for this year, for the coming fiscal year, we recalculated our overhead rate based on our budget for this year. And the way we do that, put the calculation on the screen, is we take our total budget for overhead, which was given as $3,150,000. That's the budgeted overhead dollar amount. And we divide by the budgeted level of the cost driver. And they tell us that their cost driver is based on direct labor cost. So the direct labor cost is estimated to be $1,800,000. It asks us to enter our answer as a whole percent, not in decimals. So we're entering as a percent, and we're rounding to the nearest whole dollar if we need to do that, for the nearest whole percent. So 3,150,000 divided by 1,800,000 is 1.75 as a decimal. But if we want to change that into a percent, we're going to move the decimal 2 places to the right, 175%. And you can see they have the label already there for us as a percent, so we know we need to enter that as 175, not 1.75. That makes sense to everybody? You know, that for some reason, percentages tend to be a sticking point for some people, just like fractions. I don't know why that is, but I know it's true.
So it says the ask what's the predetermined factory overhead rate based on the direct labor cost.
Mhm.
But how do we know that the direct labor costs or the direct labor costs have to be divided by the
How did you
factory
know?
overhead?
So how did you know which order to do the division? Is that what you mean? Like
Yeah.
which is the numerator, which is the denominator? Okay, so if we go to these directions that are in Blackboard for you, it tells you we take the budgeted total overhead costs. So that was the 3,150,000 that was given as the budgeted overhead cost. And we divide by the budgeted level of the cost driver. Okay, so we want dollars of overhead per, in this case, dollars of direct labor. So it could be dollars of overhead per machine hour or per direct labor hour. But whatever the cost driver is what needs to go in the denominator. The bottom part of the division. Make sense?
Yep, that makes sense. Thanks.
Okay, so that was step 1. I'll just go back to the directions here so that you can see how what we're doing mirrors what the directions tell you to do. So step 2 asks us to journalize the entry to apply factory overhead, and that is step 2 given here as well. So as we are actually producing the product, we're going to allocate the overhead based on the rate we calculated, which is right here, the 175%. We multiply that by the actual level of the cost driver. So in our case, that's direct labor dollars. in my example, it uses direct labor hours, but in our exercise, it's direct labor dollars. So we are told that the actual direct labor cost is $160,000. So following those directions from Blackboard, we take our actual direct labor dollars, 160,000, and we multiply by the rate we calculated in Part A, 175%, or if you prefer, or if your calculator that you're using doesn't have a percent sign, and I don't imagine there are calculators that don't have percent signs. I can tell you that looking at my new calculator, I'm sure there's a percent sign. I have no idea where it is. So I'm just going to use the decimal. And the dollar amount that I found was $280,000. So how do we apply factory overhead? Well, we move it out of the overhead account and into work in process. And the dollar amount is the $280,000 that we just calculated. So applying overhead means that we move it out of the overhead account and into work in process. Okay. Questions on that?
So it asks for the factory overhead to production,
Mhm.
but we don't use the factory overhead number of 3 million at all, or
So that 3 million is the budget for the whole year. For our
Okay.
next part, Part C, we're going to use what they told us was the actual cost for February. And that's, I'm just putting a T account here on the screen so we can talk through that. So here's our factory overhead cost account. It's not an expense account, it's a cost account. It becomes part of the cost of the product. So we don't see on our income statement, for example, a separate line item that says factory overhead because it's part of the cost of the product. Thinking about what we learned in Chapter 5 about the different ways of classifying costs, we talked about, and I reviewed it at the beginning of class today in the context of that supervisor position in the Chapter 816 problem. A cost can be either a product cost or a period cost. A period cost means it gets expensed, it goes on the income statement in the period in which it's incurred. Those include things like selling, general and administrative expenses. And the product cost includes direct materials, direct labor, and overhead. And those are inventoryable. They go on the balance sheet in our inventory accounts until the product is actually sold. So overhead is not an expense because it's part of the cost of the product. So it's a cost. I know it sounds very technical and nitpicky, but those are important distinctions from an accounting standpoint, a cost versus an expense. It becomes an expense as part of the cost of the product when we actually sell the product. So what I want to look at, and Drew, I see your question in the chat and I'll get to that in just a minute. But what I want to look at now is the factory overhead T account here and what's happening in that T account. So we know, as I just explained, this is a cost account, and we know at the end of the period, we have to zero it out. And so there should not ever be a beginning or an ending balance in our factory overhead. When we close our books, it should be zeroed out and moved to the product or moved to cost of goods sold as appropriate. And so that's what we're doing right now, is calculating that. In the factory overhead account, as we discussed last class, I can remember writing this on the screen. I wrote on the debit side, I wrote actual, and on the credit side, I wrote applied. And I didn't use numbers, but now we're going to be putting those numbers in. This is just for the month of February. And the final phrase in that first paragraph tells us during February, the factory overhead cost incurred totaled $283,900. So that's our actual cost. In the journal entry we did in Part B, we applied overhead based on our predetermined rate. And how much did we apply? We applied $280. Everybody with me so far? Understand where those numbers are coming from?
My question is that the direct labor cost falls under factory overhead, right?
No, direct labor is a prime cost. It's a direct cost and it goes directly to work in process. So the direct labor is not part of the overhead.
So how are we putting it into factory overhead?
We're not. There's no direct labor in there. This overhead, so the overhead we incurred, so this, let me get it so I can highlight here, where it tells us that the factory overhead incurred was $283. So those are the actual costs. Those costs would include things like supervision, which would be indirect labor, supplies, maybe depreciation on the machinery and the building, insurance costs, property taxes, those things that are part of the cost of the product. In other words, we wouldn't be incurring those costs. Oh, and I see it's 10:40. So let me finish this quickly. I apologize, we're a little bit over time here, but the only costs that are in those factory overhead, that factory overhead account, are the indirect costs. Part of the cost of making the product, but we can't trace them to a specific product easily, conveniently, economically. Direct labor costs are assigned directly to work in process. The costs that we applied out of the overhead account are based on the direct labor cost, but it's not this 160,000. It's our estimate of this 283,000. So those are total. That 160,000 in actual direct labor, we did not journalize here. That would go directly from wages payable into work in process. Okay. So I know we've already run out of time, but I just want to finish this one quickly since we have everything on the screen. What is the balance at the end of the month before we make the adjustment? Well, we can see the balance here. We have a debit of 283.9, a credit of 280. The balance would be 3,900, and that would be a debit balance. So did we over or under apply? We under applied because we didn't apply enough. That's how we got the debit balance. And back to what we talked about at the end of class last time, how do we fix that? We would simply move it to cost of goods sold. We would credit factory overhead for that under application 3,900, debit cost of goods sold, therefore increasing cost of goods sold. Drew, to your question, if the total overhead for the year is budgeted, where does the accountant get the total direct labor cost from? Which one do you mean? Do you mean the 1,800,000? Where does that come from? Or do you mean where does this 160,000 come from? And I imagine you're probably typing in the chat, but in the interest of time, let me just say the 1,800,000, yeah, that comes from the budget as well. So that's also from the budget. Both of those numbers that went into this calculation, both of those are based on our budget. Then the 1.6 or the 160,000 is how much we actually paid our workers during this period in the blending department. Okay, I apologize for holding you a couple minutes over. That's never my intention. I kind of lost track of time here. So we're going to stop here for the day. go ahead and hit your check my work. Make sure you've got everything filled in. Does anyone have any questions that you want to ask before I stop the recording? All right, well, thank you. Stay safe. I hope your winter weather isn't as bad as what they're suggesting it might become later today. And I hope you have a great weekend. I will see you all on Tuesday.